What do you have when you combine a billionaire politician, a city built by private hands, family drama, and a massive fraud? You have Macrotech Developers, widely recognized as Lodha. There's no denying that they are among India's real estate titans, crafting some of the most ambitious structures imaginable. Their stock has had its ups and downs since the IPO, but the big question for potential investors is this: is it a shining opportunity or simply a well-decorated house of cards? Today, we'll don our hard hats and pull out our spreadsheets to explore. We'll sift through the numbers, the charts, the family turmoil, and yes, the hidden secrets. Don't go away, because there's a lot to uncover here. The company and its promoters. The tale of Lodha, who is Macrotech Developers. To begin with, let's clarify the name. The company listed in the stock market as Macrotech Developers was once known as Lodha Developers. Founded in 1980 by Mongol Prabhat Lodha, they embraced the Macrotech title just before their significant IPO in April 2021. In a quirky twist, they decided to revert to their roots. As of June 2025, it's official, they are back to being Lodha Developers Limited. It's like they had a midlife crisis, switched identities, and realized, actually, the old name worked better. This small detail reveals how strong their original brand is. The founder, a man of dual worlds. To grasp the essence of Lodha, you must know its founder, Mongol Prabhat Lodha. He's no ordinary businessman, he's a unique figure wearing two influential hats. On one side, he's the property mogul who created this empire from scratch. On the other, he's a senior politician with the Bharatiya Janata Party, BJP, currently serving as a minister in Maharashtra's government. His dual role isn't just an interesting fact, it's central to the company saga. He's been the MLA for the wealthy Malabar Hill area in Mumbai since 1995, serving 5 consecutive terms. In a realm where property and politics are tightly interlinked, having a founder who's a key political figure in the state with 60% of their business is, to say the least, a substantial asset. This connection can be a sturdy barrier, aiding in land acquisitions and reducing the bureaucratic hurdles that can delay other developers. Yet, it also subjects the company to increased scrutiny. Any political shifts or scandals could reverberate directly. It embodies a classic double-edged sword. What's more, he ranks among India's richest, boasting a net worth exceeding $13 billion as of 2025. The company is now under the guidance of the next generation, with his son Abhishek Lodha as the managing director and CEO. The business model: from high-end homes to Palava. So, what exactly do they do? Imagine them as master chefs in real estate, offering a menu for every taste and budget. Their primary focus is residential development, but they've broken it down into distinct categories. You have ultra-luxury projects at the high end, the Michelin-starred selection that attracts all the buzz, the World Towers, Lodha Altamount, and even a joint venture for the Trump Tower in Mumbai. They've even taken this luxury approach global, with 2 high-end residential developments in central London, which we'll discuss shortly. However, the true powerhouse of the company, accounting for over half of their sales, lies in the smorgasbord of affordable and mid-income housing. Their centerpiece here is Palava City, which isn't merely a housing project, it's a sprawling, 1,000-acre smart city created from scratch near Mumbai, complete with schools, hospitals, parks, and commercial hubs. They don't just provide you with a flat, they offer a whole lifestyle. This diverse model is a significant strength, but there's a geographical caveat. They're expanding in Pune and Bengaluru, but the Mumbai metropolitan region, MMR, still reigns supreme, providing the bulk of their income. The recent decision to revert to Lodha Developers is also strategically meaningful. This change followed the amicable resolution of a significant trademark dispute involving the founder's other son, Inhanandan Lodha. The dispute over the Lodha name was settled legally and promptly, delivering a strong statement to the market. The Lodha brand is theirs, unified, and here to last. It's a reaffirmation of their core identity at a pivotal moment. The 10-year financial journey, the remarkable transformation. Alright, let's peek under the hood and scrutinize this engine. Numbers weave a narrative, and for Lodha, it tells a tale of turbulent growth followed by a stunning and truly impressive financial overhaul. Analyzing a decade of data reveals their transformation from a highly leveraged private entity to a publicly listed financial stronghold. The revenue and profit narrative. Looking at the numbers, we can see the revenue has a strong, although fluctuating, upward trajectory. After plummeting during the pandemic year of FY21, revenue surged back, culminating in an impressive 33.5% year-over-year growth in FY25, reaching nearly 13,800 crore rupees. Even more remarkable is the net profit, which soared by a staggering 78% in FY25 alone, exceeding 2,700 crore rupees. This indicates they're not only moving more properties, their margins on these sales are improving sharply. The profit dip noted in FY23 may appear concerning, however, given the robust bounce back in FY24 and FY25, it seems to be a temporary setback, likely sparked by specific project margin issues or increased interest rates before they refinanced. The debt story: overcoming the burden. Now for the pivotal chart regarding this company. In FY21, the year of their IPO, Macrotech's debt-to-equity ratio was an alarming 4.36. To simplify, that's like having a mortgage that exceeds 4 times the value of your house, an unsettling level of leverage for investors. But then, observe the transformation. By March 2025, that ratio had been methodically reduced to a much healthier 0.36. This marks a phenomenal achievement for a capital-intensive industry such as real estate. They have successfully conquered the dead dragon. This change was no accident. It directly stemmed from their public listing. After 2 unsuccessful IPO attempts in 2010 and 2018, the company recognized they needed to transform to gain public market investors' confidence. The IPO in 2021 became the catalyst for change, equipping them with capital and discipline to slash their debt and fundamentally improve their risk profile. Stock chart analysis: the marathon runner taking a breather. Now, for those who enjoy dissecting charts, let's switch focus on the technicals. What is the current stock price revealing to us? Current scenario. As of mid-October 2025, the stock hovers around 1,172 rupees. The 52-week peak sits at 1,534 rupees, while the low is at 1,035 rupees. It's clear that the stock is leaning closer to its yearly low rather than the high. The bulls have been dormant for months, with the stock experiencing a 17% drop in the past quarter. Key indicators to monitor: when we scrutinize the chart, several key points stand out. Support. A solid support zone appears between 1,035 rupees and 1,100 rupees. This has been where buyers have historically emerged to purchase shares. If the price rebounds from this zone, it signals bullish momentum. If it breaches lower, be prepared for further declines. Resistance. On any upward journey, the initial obstacle is the psychological threshold of 1,200 rupees, a recent pivot point. Beyond this, the bulls face the significant challenge of pushing past 1,300 rupees. Indicators: the RSI insight. Next, let's examine the popular RSI, or Relative Strength Index. Currently, Lodha's 14-day RSI sits at 31.8. For those unfamiliar, RSI acts like a speedometer, measuring the pace and change in price movements on a 0 to 100 scale. Anything below 30 generally indicates oversold, while above 70 signals overbought. Currently at 31.8, this stock resembles a marathon runner leaning against a wall, worn out. It suggests he might need a break or a turnaround soon rather than a collapse. Interestingly, there's a notable divergence between the company's performance and its stock price. Macrotech recently posted blowout annual results for the year ending March 2025, followed by robust Q2 pre-sales figures for the current year. Yet, the stock remains in a clear short-term downtrend. This indicates the market may be factoring in another risk, a concern not reflected in the earnings report, likely the recent corporate governance scandal involving an ex-director announced in September 2025. Consequently, the current stock price seems burdened more by trust and governance issues than financial outcomes, a core concern for potential investors now. Benjamin Graham valuation: would the father of value investing approve? Benjamin Graham, Warren Buffett's esteemed mentor, is recognized as the father of value investing. He developed a formula to determine a stock's intrinsic value, which reflects its true worth, devoid of market trends. This approach is timeless, conservative, and fundamentally cautious of overpaying for a mere narrative. Let's see how Lodha holds up under Graham's scrutiny. A quick note: Graham himself noted that his formula should not be blindly followed but rather serves as a foundation for assessing results from other growth formulas. Let's plug in the figures as of October 2025. EPS. The earnings per share for the last fiscal year, FY25, was 27 rupees and 76 paise. G. This segment is subjective. Analysts predict high growth rates of 20-25% for upcoming years. However, staying conservative and aligned with Graham's philosophy, let's use a long-term growth estimate of 15%. This results in an intrinsic value of approximately 916 rupees. The conclusion: with the current market price near 1,172 rupees, it's probable that Benjamin Graham's spectre would disapprove. This conservative value metric indicates the stock is overvalued. This outlook encapsulates the classic tension between value and growth investing. The enterprise records impressive growth figures, which secures a premium valuation in the market. Nevertheless, the Graham formula, serving as a value metric, perceives this premium and advises, there's no margin of safety here. It reveals that the present stock price heavily relies on lofty growth expectations in the years ahead. Should this growth trajectory falter, there could be a significant drop to reach its value price. Pros versus cons: the bull and bear clash. We've examined the business, the financials, the stock chart, and the valuation. Let's synthesize this information in a classic bull versus bear showdown. The bull case: reasons for optimism. Market leader in a consolidating sector, Lodha commands a substantial stake in the Mumbai metropolitan region, India's richest property market, holding an impressive 10% share. As the Indian real estate scene consolidates, larger, organized, and better-funded players like Lodha are gradually capturing market share from smaller, disorganized builders. This trend serves as a potent long-term wind at their back. Strong balance sheet. This is critical. The debt challenges that haunted them are resolved. With a debt-to-equity ratio of just 0.36, their balance sheet now signifies strength, enabling them to weather downturns and capitalize on opportunities. Promising growth pipeline. They have plenty of projects on the horizon. Lodha owns over 3,800 acres in MMR, with the ability to develop over 300 million square feet. They continually initiate new projects, bolstered by solid pre-sales figures, providing clear future earnings projections. Committed shareholders. When insiders hold on tightly, it's a great sign. As of June 2025, the promoters, the Lodha family, retained a substantial stake of about 72%, while foreign institutional investors, FIIs, have steadily increased their holdings to roughly 25%. This represents robust confidence from both insiders and global funds. The bear case: reasons for caution. Significant governance issues. This is a pressing concern. In September 2025, former director Rajendra Lodha was arrested due to an alleged fraud exceeding 85 crore rupees. 18 serious allegations arose, linking undervalued land deals and questionable transactions. Although he's a former director, the alleged fraudulent activities took place while he maintained significant authority. This raises doubts about corporate governance and internal control strength. The family feud shadow. The high-profile, 5,000 crore rupees trademark feud between brothers Abhishek and Inhanandan Lodha was only resolved recently, in April 2025. While resolution is favorable, the level of bitterness suggests historical internal conflict within this family-run enterprise. Geographical dependence. Despite their achievements, Lodha remains heavily reliant on Mumbai. This dependence exposes them. Any local economic decline or changes in state regulations could significantly affect their operations. Valuation strain. The Graham analysis confirms that the stock carries a premium. The market is banking on sustained robust growth. If they falter in meeting these lofty forecasts, or if broader market sentiment shifts, the stock may face a severe downturn. In the end, the entire investment thesis for Lodha hinges on one crucial dilemma. Are you prepared to trust those in charge to translate their remarkable growth into shareholder value despite recent governance challenges? The bull narrative revolves around their impressive financial recovery and market standing. In contrast, The bear perspective centers on determination regarding whether leadership will ensure that growth and trust coexist without being jeopardized by scandals. Key considerations: scandals and global aspirations. Let's delve deeper into the significant controversies at play. First, the Rajendra Lodha fraud case is paramount. A former director, who served from 2013 to 2025, was arrested in September 2025 following a complaint from Macrotech. Allegations suggest he exploited his authority, engaging in fraudulent acts, including selling land at discounted rates to entities linked to his son and conducting fraudulent acquisitions, totaling an estimated 85 crore rupees loss. This reflects positively as current management acted but reveals a profound oversight failure that allowed this misconduct to occur. Second, the Lodha brothers' trademark dispute reflects internal strife. Abhishek Lodha's Macrotech filed a 5,000 crore rupees lawsuit against his brother in Hinandan's firm for name misuse, asserting market confusion. This saga, with their mother mediating, concluded positively in April 2025. The settlement grants Macrotech exclusive rights behind the Lodha brand, while in Hinandan's venture becomes House of in Hinandan Lodha. This resolution eliminates major uncertainty and positively impacts investors. Global market footprint. Despite being India-focused, Lodha does have a notable international presence. In 2013 and 2014, they confidently forayed into prime central London, acquiring two prestigious properties for ultra-luxury residential projects, Grosvenor Square and Lincoln Square. Their success is evident with massive sales, one quarter in 2021 alone grossing £191 million, around 1,900 crore rupees. This stellar performance allowed for early repayment of international debt while repatriating significant capital back to India for domestic growth. Their London endeavors weren't just ambitious, they showcased their ability to manage high-stakes projects globally. So, what's the final verdict on Macrotech Developers? There are two distinct, compelling narratives at play. Story 1 tells of a market-leading real estate giant that has achieved an astounding financial turnaround. They've effectively managed their debt and are expanding rapidly, well-positioned in India's most affluent real estate market. Story 2 warns of serious, recent corporate governance issues. A prominent fraud case potentially taints the company, paired with a history of family disputes, and a stock price that already seems inflated adds to the risks. Ultimately, investing in Lodha rests on whether you believe their remarkable growth trajectory can mitigate the risks stemming from recent governance concerns. Is the potential reward of owning a leading entity in a thriving sector worth the risks posed by trust and oversight dilemmas? This is a question only you can resolve through your own research and risk evaluation. And a final note, this video serves educational and entertainment purposes only. I am not a financial advisor, and this should not be seen as a recommendation to buy or sell any stocks. Please conduct your own research before making any investment choices. Thanks for tuning in, and see you next time.